This is DFW Home Talk, where we educate you on the real facts of the local real estate, credit, and finance markets, empowering you to make informed decisions for you and your family, achieve financial goals, and the dream of home ownership with financial security. Now your host, Kimberly Beckham.
What is something that someone can do right now in order to prepare for financing their children's college?
Well, sure, Kimberly. Let me just say that the three most popular or utilized accounts that folks use to save for college are what's known as the Uniform Transfer to Minors Act, or UTMA, and the Uniform Gift to Minors Act, or UGMA, accounts, the Coverdell Education Savings Account, and 529 savings accounts. Those are the three most popular.
Okay, can you, I want to break those down.
Sure.
Can you explain to us what the UTMA, am I saying that correctly, or UGMA account is?
That's exactly right. I will. Those are what are known as trust accounts set up for minors, since minors aren't allowed to enter into contracts. And these are custodial accounts that allow minors to own securities and other investments. The UTMA, that's UTMA, is a little more flexible and allows the custodian to hold other property, art, and other appreciating investments. So it's a little more flexible. There is no tax deductibility on these accounts, and withdrawals might be subject to the kiddie tax, and that's in quotes.
Can you tell us what a kiddie tax is?
Well, it's basically what the IRS says. It's which taxes certain unearned income of a child at the parent's marginal rate, no matter whether that child can be claimed as a dependent on the parent's return. Now, I'll quickly add, I don't give tax advice, so I would recommend anyone considering one of these type of accounts to discuss the implications with a tax professional.
Right. And so are there any tax benefits to having that kind of account, or what would be the reason someone would open that kind of account?
Well, good questions. There's no tax deductibility. You know, as I said, there's no tax deductibility. One of the main reasons people would probably open these is because they are very flexible. They are not a education savings account per se. They're a trust account for a minor that can be used for education. So that would be one reason.
Similar to a trust fund.
Exactly, similar to a trust fund. Now, an important thing I think you need to keep in mind if you're looking at what you're wanting to do is these are trust accounts for minors. So when that minor reaches the age of maturity, which is either 18 or 21, depending on what state you're in, that account becomes the child's or the minor's. It's no longer a custodial account.
Oh, so that's interesting. Whatever you put in there, you need to plan on that is going to the child.
Yes, and so that means that they could, if they decide not to go to college, they could use that money for something else.
Is there a way to prevent that from happening, or just you have to do a different kind of account?
You would have to do a different type of account. Can
we touch on the Coverdell?
We sure can. It's the official name is the Coverdell Education Savings Account, or the Coverdell ESA. Now, the Coverdell is only available to parents whose adjusted gross income is either below $110,000 if you're a single filer, or $220,000 for joint filers. That's an important thing to keep in mind. There is also a limit of $2,000 per year per student that can be contributed to a Coverdell. There's no initial tax deductibility, but if you use it for qualified expenses, in other words, education expenses, the withdrawals are tax-free.
So you can only put in $2,000 a year into that account for the education fund.
Right, per student per year. And they can be invested in, just like anything, for the most part. And now here's an important point. These assets are considered, these accounts, are considered to be an asset of the student. So it will be taken into account for financial aid. That's an important point.
So it would be an asset of the student that they would have to record, and I think Leslie is going to touch on this a little bit later on the FAFSA.
Absolutely.